A small problem to understand this. Received in cash during the year 3,500, accrued on 1st January 100, accrued on 31st December 200, prepaid on 1st January 300, prepaid on 31st December 400, income of the current year. Accrued means you're talking of outstanding subscription here, and this prepaid is income received in advance. Received in advance. So if we were to prepare an account, what would it look like? Opening subscription received in advance is a liability. Buy subscription received in advance. How much? 300. What was our opening asset? Accrued, earned but not received. So take it to the debit side. To accrued subscription opening is how much? 100. Next, how much is received in cash by bank? Actual receipt, bank account debit to income account, 3,500. Next, closing, that which is being received in advance is 400. Received in advance is a liability, credit liability, debit subscription account to subscription received in advance. This is closing but okay. How much is that? 400. And what about accrued or outstanding? That is income for the year. So credit income, debit, accrued, subscription. This is closing. How much is this? 200. So the amount which would be transferred to income and expenditure is the balancing figure. How much is that? 3,500. 3,500 would be transferred to income and expenditure account. We can do this in a statement way also, logically, without preparing an account. If we were to think it through, let us just try if that can be done. Received 3,500. Okay. Now, opening outstanding was 100. That means opening outstanding means this was an income for last year and it was not being received as at the end of last year. So this is actually 100 rupees income for last year. It must have been received in the current year. Is this income for the current year? No. What are we trying to find out? We are trying to find out the actual income for the current year, whether it has been received or not. And we will consider only income for the current year. Okay, because we want to find out the figure which will be ultimately transferred to income and expenditure account. So our aim is to find out income for the year. So let us see what is outstanding. Last year was 100. We should have received it this year, but that is last year's income. Let us remove. What about the income which is outstanding at the end of the year? If it's outstanding at the end of the year, it's actually income for the year, but we have not received it. Not received, not included here in this 3,500. So let us add this 200. Next, you have income which is received in advance. At the beginning of the year, 300. What is 300? Income for the current year which we received last year, because last year 300 was received in advance. Therefore, it must be income for this year. We add this 300 here because it is income for this year and it is not included in these receipts which are receipts for the current year because it was received last year. So, we add it since it's income for the current year. Next, prepaid on 31st December 400. What is this? Income which has been received in advance at the end of the current year. Income received in advance at the end of the current year. So 400 rupees was received It's included here, but it is not income for the current year. Again, what would be the amount? 3,500. So this is the amount actually received. What was 100? This was the amount outstanding as of last year, outstanding at beginning of the year. So we must have received it this year. It is included here, but it is not an income for the current year. That's why we deduct. What happens to the amount which is outstanding at the end of the year? If it's outstanding at the end of the year, it is income, though not received. Therefore, we add it. It should be a part of the income for the current year. If you look at the income which is received in advance, 300 is actually income for the current year, though we received it last year. So we add it because it is not included in these receipts. This receipt is cash received for the current year. So this is received in advance at beginning of year. Similarly, received in advance end of the year, you have 400. This is not income for the current year, so please remove it. So we've deducted this. So whether we make it in a statement form or we prepare a T form of accounts, we draw the same conclusion. Subscription happens to be an important topic under not-for-profit organizations.